morning, everybody. TGIF, NFP, no frickin' problem. How are you? Everyone doing okay? Have a decent week? What a great week FX ForexAnalytix had this week. And if you've been attending all week, you know why. Not because of Twitter, because of this. From here. Blake, silver, from up here. And that was even given away on our blog, chart of the day. So, wow. You know, if you've been hanging out in face, you've gotten a lot of value for free, don't you think? Give me a Y if you agree with me. Hello, Cheryl. What a value. If anyone wants a refund from attending face, let me know. Anyone out there need a refund? I'll wire it to you in your imagination. Okay. All right. So, dollar getting a bit of a bounce. You know, the dollar bulls will probably say, you know, we could have another drive to new highs. The Fed disappoints next week. Right now, it's an I don't know. I believe that selling rallies will work. The only thing that holds me back, but, you know, nothing works all the time. Everyone see the RSI up here at 80 on the 4 hour. What do we have on the 1? Even here on the 1 hour, 81. So you can't take this off the table that it's a high, not the high. Adam Button was on Tuesday when before the dollar was breaking down. He likes it. Thinks there's higher levels to go. He was talking 10% in the euro. So we're at one of the resistance levels. Greg had said we could go to 112 and maybe 114 before the big break in euro. So we'll see what happens. But anyway, Paulie called it out in European crossover down here, had the number before it got there. Blake called it out on phase. We also did pattern and plays on that in Aussie, and really outstanding work by the team. So Blake, I'm having a little trouble talking today, so actually something cracked on my lower, so I shouldn't have been bragging. So my tongue hurts.
Oh.
Yeah.
Oh.
So a piece broke off and my tongue is scraping against it. Anyway, so I'm having a hard time talking. So
wow.
I'll be okay by Monday.
Can we get that to happen to Steve at some point, please?
I don't think anything could stop that. All right.
Yeah.
So,
all right. Well, I'll take over then.
Thank you, buddy.
Let's see here.
Oh, one last thing, the oil. Okay, you got it. It's all right.
What about oil?
Well, you know, if you had that triangle drawn in oil, we kind of had a false breakout.
Where is my crude?
You know, everyone had the same, you know, descending triangle. Oh, your line it never got to. All right, well, there was a tighter line if you adjusted against that previous high that it came out of by about 30 pips. Yeah, that. Yeah, that's the line I had. But we're also at support now, too. So, you know, I lean towards this. Probably this was a break to buy in crude and that we'll go to your blue line.
Yeah, I mean,
that's my guess. Yeah.
You know, what do you do with this? I mean, you know, trying to trade crude here. Yeah, it's a disaster. Okay. Well, thanks, Coach. Hope your mouth feels a little bit better. I know you got, I'm just going to prohibit you from speaking too much for the next 20 minutes as I go through some of these majors. So, you know, let's first and foremost, let's talk about where the euro's at. So the euro, I'm going to actually pull us up on a weekly chart.
Great trading this week, Blake. You had a great week, didn't you?
I did. I actually had a really great week.
It was better than last week, wasn't it?
It was. If I could have this week,
okay.
continue. It'll be a pretty good week. So I want you guys to see where we're at for the euro. Let me pull up. I'm actually going to pull up a different chart so I can draw a little bit. That's a chart that I draw on all the time.
And if you had a good week, and I'll shut up after this, that means everyone who hangs out with you and the guys in members chat most likely did too.
Yeah, I think most people did. It's I always I always say this, and don't take offense to this, but you can always lead a camel to water.
Yeah, I know what you mean.
You know what I mean? But I hope people had a good week. It doesn't mean everybody traded well. There's a big difference, huge difference, by the way, between making a good call and trading a good call.
Yeah.
Night and day. So I make a lot of great calls, and sometimes I don't trade them very well, and or vice versa. Sometimes I don't call it, but I still trade really well. And so I hopefully our guidance has helped a little bit this week, especially buying the euro off the lows, off the descending wedge here. This is a weekly chart. So what I'm really hoping for today is the euro closes near its highs. Now that would, to me, would really validate the reversal off of this descending wedge. One of the things that we've been discussing in the chat room for the last 24 hours has been the nature of this jobs report. This is a late cycle employment cycle report, and it's funny because I said this yesterday. Then we got confirmation from one of the banks. I can't remember if it was Citibank or Goldman or somebody. I read a report shortly after discussing this with the guys and gals in the chat room, that if we get a good number today, this is going to be probably the last good number that we're going to get in this employment cycle. And I'm going to pull up Forex Factory just because it's got a decent chart to read. When you look at employment data, we're probably pretty late. Let me grab a pen. Let's see if I can grab a decent pen here. Whenever I draw, oh, here we go. I can draw that. All right. So in employment, what we're looking at is, something that looks like this. So if we get and that's Canadian. I didn't even want to do that. I've got the wrong, hold on. Let me get over to right employment here. There we go. Okay. This is it. All right. So, employment is looking like this. So even if we get a good beat here, we're expecting employment to start to decline moving forward. Okay. So the reason why I'm pointing this out is because I am going to, if we get a good number today, say we beat expectations, I am selling the dollar into strength. So, and I told everybody yesterday, that's my plan for today. So what I told them what I was hoping for is I was hoping for a move. I was hoping for a move in the euro dollar to 110 today because I want to be a buyer. And let's hope that that's the case. If we get a number today that, let's say we get a 160,000, 170,000 jobs were created, and the euro dollar moves down to 110, somewhere down here, I'm going to be a buyer. Now, the flip side of that is if the number comes in unexpectedly weak. Most traders are expecting the number to come in strong. So if we have a surprisingly weak number, the euro may not stop. I mean, it may just break through this resistance here and start on its upward trend. And then then we're going to have a really, really strong weekly candle. And that's why I point that out, because the weekly candle looks like this as for right now, but imagine by the end of the day, it looks like this. Let's see, let's say it looks like this. You know, we have a green candle by the end of the session. That's going to be a really bullish hammer off of, new trend lows, and that to me is going to be an indication that the dollar is a straight up sell. But it depends where the euro really closes today. I'm hoping the euro closes near 111, which would be great. But if we get an opportunity to buy it at 110, it's probably not going to close at 111. If we buy it at 110, it's probably going to close at, I'm hoping if I buy it at 110, it closes at 110.50. But then it's going to look something very similar to this, but it's still very constructive. But again, if we have a surprise miss and the number comes in, much worse than expectations, or let's say, the hourly employment comes in worse, which has been where the focus has been on employment as of late anyway. But let's say, regardless, the data comes in not good, and the euro closes at 111, that's going to be a really big indication that we're turning in the dollar for me. But I'm actually trading the euro. I'm not so much focused on the yen right now. The yen did this week what I thought it was going to do. It was going to break out of this channel to the upside. I played the New Zealand yen earlier this week to the upside, made a little bit of money, but I didn't play the yen as aggressively as I was going to. If you guys have been listening in, you guys knew that I was looking for a break at this down channel, but I was looking for this last week. It happened this week. We had this double bottom in the pound yen. Aussie yen broke higher. New Zealand yen broke higher. So I was waiting for all this to happen. I just, I didn't play it as well as I should have. This is a great example of, I made a great call, but I just didn't trade it as well as I called it. And that does happen. It does happen from time to time, for sure. But anyway, so that's the euro. The cable, I think the cable is holding up pretty well. We have to watch the cable in the event that we break above this 123, 123.80. If you look at the spike low here, that low was 123.73. So it's 123.75. So really, if we break above 123.75, that thing's gone. And I'm still long some cable, and I'm looking for it to eventually break higher. So that's what I'm looking for there. The Aussie and the Kiwi are testing major resistance right now. I don't know. I mean, first of all, I don't know how stocks are going to respond to a good or bad number. I don't know. I'm not. Stocks are obviously strong right now. I think we're going to make our way to 3,000 in the S&P, but as we're only 15 points away now from the from the 3,000 handle on the S&P, but the Aussie is really probing some pretty key resistance. We broke out of this triangle, and I think this is the line in the sand. Really, this is where the bears need to hold the line, because the Bears did not hold the line last night. That was the most boring football game on the face of the planet, by the way. For those of you that watch American football, that was like horrible. I'm sure most of you would agree. I almost fell asleep watching the last fourth quarter. Anyway, there's the Aussie pushing up against some resistance. The Kiwi is also pushing up against this 64.20. I just got out of my Kiwi this morning. We also closed the pattern in play. I personally pulled it off the table because we're knocking our head up against where we thought we were going to go. So this has been a nice trade this week in the New Zealand dollar. Let's talk about the dollar Canadian really quick. The dollar Canadian, I'm still unsure of how I want to trade it. However, we do have Canadian employment data as well. So the pound's moving a little bit. some comments coming in from UK Labour would seek ban on bankers' bonuses if elected. It's just UK opposition parties deny. Whoops, that's not it. That's not what I want to see. That's old news. Okay. The cable is moving a little bit. I thought there might be some headlines coming out. Anyway, the dollar Canadian though, we did this false breakout and then we broke back below this wedge resistance. I actually had an order to sell dollar Canadian. It's off my. I canceled it, but I had an order to sell the dollar Canadian if we rallied back to this previous trend line overnight at 132.60. I had an order to sell it. It just never got there. But I don't know how I really want to deal with the Canadian. It's the guys from my office are pretty bullish the Canadian dollar because obviously risk appetite is stronger, and they're playing on the anticipation that the new USMCA is going to be passed here in the next couple of weeks, which will eventually be bullish for the Canadian currency. I just don't know if the timing's right, personally, at least not for me, and not for what I see technically. So for me, it's hard for me just to get into a dollar Canadian short, which would be Canadian dollar long trade right now. But you guys know as well as I do, when the Canadian data comes out alongside the non-farm payroll data, it's going to gap. So it's trying to chase that. You kind of have to be positioned in the Canadian ahead of data versus trying to trade it right after, because trying to trade it right after, it's a little bit more difficult. We'll gap 30, 40, 80 pips, and then it might grind another 20 going in that direction, but it's hard to catch if you're not already pre-positioned. The problem is I didn't catch the dollar Canadian on a short earlier in the week, so therefore I'm not positioned to be on the short side of the Canadian right now, of the dollar Canadian, that is. So anyway, I'm not too sure how to trade it. I think you do have to pay attention to this support level right here, because if we break through this support, which is roughly 132, I mean that's going to be pretty bearish. But we have to see a weak U.S. data, strong Canadian data, employment data in order for that to happen. I'm going to leave the dollar Canadian alone probably today, personally. I say that now, but that doesn't mean in the heat of the moment I won't get involved. Another pair that I do want to point out, just because it's been on a rampage, is the dollar Swiss. The dollar Swiss, if you guys believe that stocks are going down, if you believe that stocks are eventually going to move lower, then being on the short side of the dollar Swiss is probably where you want to be. Now, the reason why I say that is because if the market does come down, what's going to happen is people are going to start to repatriate and buy back their Swiss francs that they have sold on this massive carry trade. However, hold on really quick. I was just looking at my team here. It looks like Steve just lost his internet. So we're gonna be right here, right up against resistance, and I think that this is, if you guys want to be a seller of Swiss francs, or of dollar Swiss, excuse me, a buyer of Swiss francs, this is probably the place you want to do it. We're nudged up against resistance. I do believe that a break below 97 is going to be very, very bearish for the dollar Swiss. We are far away from that right now, but it's just something to think about, in the days and the weeks ahead. One last thing, I guess let's talk about the dollar yen, because this is, even though I'm not trading it right now, and but this will be the currency pair that you probably want to watch following the non-farm payroll, because I think this is going to be your most cleanly affected pair, is going to be right here. Hold on really fast. I gotta I got to do something really quick, guys. Sorry, I just had to take a little bit of stuff off the table. The dollar yen. Let's just keep in mind. Sorry, guys, I was just looking around really quick. That we're getting some movement. It looks like some non-farm payroll squaring up. The dollar yen is above 106.80, and this is a pretty big. You know, as you can see it in pink. This is a pretty big resistance. It's going to act as support today. So if we have a weak number, which I don't think we're going to, but let's say we have a weak number and we break back below 106.80, that's not going to be good for the dollar yen, because the dollar yen just got finished squeezing a bunch of shorts. And so,
okay, buddy, if the breakout holds, does it change your view?
You mean for this dollar yen?
Yeah.
Yeah, I mean, I first of all, I think it's bullish right now. We came out of this channel, and I think it's bullish. The problem is if it breaks back below 106.80, like
because your bias is bearish, but you want to see it negate the breakout to get bearish again.
No, the way I've been actually bullish all week. The yen pairs, the yen pairs. I'm bearish yen.
Okay.
Bullish the yen pairs. So the euro yen broke out of this channel. Pound yen double bottom. Aussie yen broke out of the channel. New Zealand yen broke out of the channel. Canadian yen broke out of the channel. Dollar yen, I knew it was going to break out of the channel, and it did. Like you might have missed this because you might have stepped away from your mic, Coach. But I knew this was going to happen this week. I just didn't trade it well. I was telling everybody via ForexAnalytix all week. If you go just read any of the yen pair analysis, and you can read all week that it's, hey, we're going to break above resistance, blah 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 blah. So now that we've done it, and the dollar yen's done
blah blah blah.
But well, I'm just rehashing the stuff.
It was good insight.
Thank you. But what I'm saying right now is it's bullish at the moment, and if we break back below 106.80, I don't know if I'm going to be, I don't know. I would say that the play might actually be over, and this would be kind of one of those false breaks. And then, we head back down, and that's possible, especially on a week. Everybody's expecting a strong number today, based on the ISM, based on ADP, and I think it's going to be a strong, jobs number too.
The guesstimates, bro?
Huh?
What are the guesstimates?
About 160. But I think that I think this is the last piece of strong data that we're going to get for this cycle. So therefore, on strong data, if the euro dips to 110, I'm a buyer. Now, again, this is one of those situations where, if the data comes in weak, the dollar is just going to get smashed. You're going to see the euro probably trade up towards 111, and you're going to have the pound probably trade up to 123.50. And the dollar yen's probably going to trade back down to 106.50. So again, everybody's leaning towards a strong number. But if we get a weak number, I think all bets are off, and you're going to see the dollar really come under pressure. And then what I do with the yen pairs is questionable. I don't know, because you're going to have a situation where the dollar yen comes down, the euro goes up, so the euro yen may not move a whole lot. Pound dollar may rip higher, but dollar yen may drop. Pound yen may not do a whole lot. So, I'm not sure what I'd do with these yen pairs, but this dollar yen is questionable if we do have a weak piece of data. Now, like I said, I don't think that's going to be the case. I really don't. But we have to be prepared for, any situation.
By the way, Blake, sorry to interrupt. Have you seen Trump's tweet?
No.
He tweeted 2 minutes ago, and he said, the Fed needs to be cutting. They were too early to hike. And he said at the end, where did I find this guy, Jerome? He actually said that.
Wait. That's what moved the markets. I was wondering what moved the markets. Okay.
So maybe he knows the number already. You never
Yeah,
know.
let's
And
see.
it's not a good one. I don't know.
Wait, okay, so I agree with Jim Cramer. The Fed should lower rates. They were way too early to raise and way too late to cut, and a big dose quantitative tightening didn't exactly help either. Where did I find this guy, Jerome? Oh, well, you can't win them all. Wow, man, that is beating the heck out of Powell. Wow, that's crazy. That is
Remember,
crazy.
Powell is speaking later today as well.
Yeah, maybe this is a weak, maybe it is weak data. Yeah, Powell is speaking, and it's going to be a pretty important comments too.
Oh, I always thought Jim Cramer had more credibility than any Fed president.
So,
Booyah.
where is Steve coming on today?
He's still having issues. We do have Andre to join if he can't make it.
Okay.
But yeah, he's having problems because they're.
So I might have to sit with you guys through non-farm payroll. It looks like.
We can look. We can take over if you need to trade. It's no problem.
I'll trade. I just may not be doing a whole lot. You might have to do some commentary here. Well, I just keep it on the dollar yen. I'll throw out comments, but I'm
Jim Cramer for Fed chairman.
So one of the other things I want to point out too, for those of you guys that are looking for euro dollar support, like I'm looking for the euro to be supported. Like I said, any dip down to 110 and I'm a buyer. Somewhere down there. I don't have a limit order in, just so you guys are aware. All my orders are pulled, so I'm not going to sit there and put in a limit. Have the number be like, we have a $250,000 jobs, and the euro goes down to 109.60. I'm not going to do that. So I don't have an order pulled all my orders, but any dip down to 110, and I'm looking to buy now. With that being said, one of the other, I was going to say, because I'm looking for euro support, if you look at like the euro pound, I'm not so concerned with, because it's it's more pound related, but like the euro Aussie is coming into major trend line support here, which is a risk off trade. If it bounces, it's a risk off trade typically. But look at the support that comes in at 161. This is going to be a 2-year trend line support coming into play. Euro New Zealand, I played this on the long side 2 weeks ago, through here, and we're back at some pretty key support here in the Euro New Zealand. We're at the 38% retracement. I don't think there's a whole lot of downside here. So again, this is just me kind of looking around for what could be euro support. Euro Swiss, this thing is finding a lot of support down here. It's not breaking below 108, which I was thinking, yeah man, we break below 108, but we had this double our range extension, completed it. We've got some support here. So the euro's got some organic support from cross rates, and that's why I'm going to be focused around these these levels. So it looks like Steve is back. But we can't hear him. So let's go over to the dollar yen. All right.
Don't worry, I'll cover the numbers in terms of what's happening, and you can.
Well, here's Bloomberg. So you guys are going to see them here first. This is where the numbers are going to come across. So
we should
this
keep
is
an
the
eye on
headline number right here.
Yep, we should keep an eye on the revision as well. It's always important.
Yeah, you'll see those right here. Okay.
Can you hear me, guys?
Unfortunately, yes.
Oh, okay. Can't guarantee about stability because I'm still waiting for the repair crews to fix this issue they've created, but I'm back.
Good.
Hey, heads up, guys. About 30 seconds away.
Yeah, average hourly earnings, I think, are not going to be too important on this occasion, but we have that as well.
Need a flash, by the way. 130,000. Wow, it's a week.
Yeah,
it's weak.
Yeah.
No kidding.
Imagine when it gets revised, because the previous year we got 500,000 less.
But by the way, Canadian employment was a huge beat. So USD CAD, I'm sure, is dropping like a stone.
Lower, yeah.
The numbers are revised lower, yeah.
Average hourly earnings 0.1 better, but who cares? Revision on last month's payroll is actually very small, like 4K. So it's really just a headline number, which is not good.
Yeah, dollar is dumping, but stocks are still near the highs. They don't seem to be responding negatively for the time being.
Yeah, and we're not seeing a huge move in the dollar. Just you know, if you look at the dollar, it's coming down a little bit. Here's like a.
Well, maybe this built the case for Powell to go a half. At least people thinking that. You know what I mean?
Yeah, I mean, here comes the dollar starting to push up a little bit here. So we'll see if that. Yeah, here goes the euro starting to spike up. The pound starting to spike up. Man, the Aussie and the Kiwi. Aussie's breaking higher. Stocks are coming down. Gold and silver just ripped. That stinks because I really wanted to buy silver at 1780, and that doesn't look like it's going to happen. So, and this is, you know, I'm not really too sure. The euro coming off here, I just bought a little bit. I'll take that. Down here, I'll buy a little bit more if I can get it a little cheaper too. I do think these numbers are not good. So, but we're not seeing a huge response either. It's not like we're not going gangbusters here. Most of these commodity currencies are just, wow, look at the Canadian. So the Canadian was way stronger. Did you guys say?
Yeah, it was 80 something, 81K, I think.
So.
Versus 19K expected, so big beat.
Yeah, wow. Okay, wow, that was a big beat. Okay, so this dollar Canadian is going to get just absolutely floored. That's probably one of the reasons why the commodity currencies are so bid up right now, is because of that. Because you're seeing, you know, just the Canadian, you know, do really well. Let's see if, yeah, I mean, I'm surprised I'm surprised the dollar is not more responsive, really, right now. So, and I'm still going to try to buy the euro at 110 if we get there. All right. So is Steve back, or is he not back? Kind of back?
He's kind of back.
Kind of back? Oh, he lost internet again. Okay.
Yeah.
So, well, you know, the good news is I think we have Andre here. So, Andre, are you here?
He is logged in. He's unmuted, but we can't hear him. I mean, until he comes in, I've got a couple of things to say. So I could do that.
Go ahead. Leave it on. I'll leave it on the charts here. So I'm here with you. So what do you got to say?
Okay, so we had just a couple of things. We had the usual circus show of Brexit, where I don't know if you guys remember, Prime Minister Johnson decided to suspend Parliament, as is done over the past few years, for a certain number of weeks. But the timing was really not good, because he wanted to suspend it just now, basically, until the Brexit deadline, basically. So it was something that's been opposed, and there was a formal legal challenge yesterday launched, and there was a decision today whether to reject or approve this challenge. And the initial headline was that the challenge was accepted. So that was bad for Boris Johnson, and cable actually rallied a little bit. And then the next headline was, scratch that, actually it was rejected. So that was a bit of a mess. But it just, the whole situation continues to be very messed up and very difficult, really, to gauge and to try and figure out what's going to happen. But as you said before, the pound seems pretty good, pretty well supported at the moment. And apart from that the initial shock, it didn't really do that much.
The yen pulled right back to your line, Blake.
Yeah.
The breakout area.
The dollar
and bounce.
Yeah, I
good.
mean, it did.
Right there to your, look at that.
Dollar's not doing a whole lot. I just bought a little euro at 25 too. You know, it's just
I think the algos are following you.
no, maybe. I don't know. Try not to pay attention. But you know, the pound, but here's the thing about the pound. I guess I should say this, Stelios. We were holding above 123 and we're finding some support here. So, you know, it's a bit of a mess, but I think that for me to feel comfortable about my cable longs, I want to see us above 123.75, which you know, based on the dollar reaction this morning, I'm not sure if we're going to get there. I'm surprised this dollar Swiss is still up where it's at. I'm surprised the euro's down where it's at. I'm surprised the euro didn't break above 110.50. Surprised the dollar yen didn't break down. I mean, like I said, it's some fairly weak data too.
I personally think, you know, all these dollar pairs, I think we should be, well, personally, I think we should be selling the dollar on any of these. It should be lower. So my view is we have the Fed on the 18th of September. We're pricing 25 basis points plus maybe half more, something like that. So basically it's 100% priced in. I think as we get there with this number, the market's going to price more than one hike. Will it price two? I don't think so, but it will price 1.5 or something like that. It always does that. And let's not forget that the Fed has always been more aggressive when it comes to easing. Remember in 2008 very well how they were cutting much more than the market was expecting. And they have Trump also on their side. And I know they're not supposed to be influenced, but you know, with all these things aligning, I think that the Fed could well surprise on the dovish side. And I've said it before, I know it's a very bold statement, but if they hike more than 25, I think they could hike 75 and take the rates to 1.5%.
You know, let's talk about like the Fed as far as, you know, let's talk as far as the Fed and possible easing. A lot of people are looking at the Fed maybe being a little bit more aggressive, but why would the Fed be aggressive ahead of, you know, Chinese negotiations?
Sorry, my connection was cutting up. Can you say that again? I
was going to say, why would you know, the Fed cut aggressively ahead of, you know, these Chinese negotiations, knowing that we're going into, you know, some bigger negotiations in October? Yes,
that's a good point. However, on the other side, look at what the Chinese have done with the yuan. It depreciated quite a bit. So if they cut aggressively, the dollar yuan will probably fall below 7. Well, it will fall below 7, but it's just going to go back to levels that were considered normal up until a few months ago. So yeah. I know what you're saying, and it's right. But we've seen stranger things happen, and I think that the dollar is just one part of the equation on this whole. The dollar and the yuan. I mean,
I just sold my euro for what it's worth. I just took my 10 pips off, like on my average. It's like there's nothing to do. We do have Powell coming a little bit later today, so maybe that might be what the market is looking at. We have Powell. He's speaking at, I want to say it's 12:30.
It's in 4 hours from now, I think.
Yeah, 9:30 in the morning my time. So that's going to be at 12:30. That's going to be possibly a market mover, and maybe the market is kind of waiting on that for him to speak, because he might set the pace for the dollar. And it's a bummer, because I thought this non-farm payroll was going to be a little bit bigger mover than it was. I'm still, pretty bullish the cable here. Hold on, let me draw something for you guys with the pound.
Wow, we've seen the metals. Metals are basically, silver is up on the day now, and it was down 3% at some point.
I am so irritated about that, because I wanted to. If you guys didn't see, if you're not ForexAnalytix subscribers, this is what I was looking for. I was looking for a dip, as I was waiting for the euro to dip to 110. I was looking for for silver to dip down to 1780 and then to get long off of this trend line, but just it's a bummer.
It could be worse. Not worse, but if you were in the chat room, I actually scalped silver again today. I bought little bit at 18.20 and a little bit at 18.27, and I got out at 50.
Wow,
But now it's gone. I don't know what's wrong with me, man. But
what is wrong with you? That's very abnormal behavior for Stelios.
But now look at it; it's flying.
Yeah, it is. But again, I think we'll get confirmation maybe when Powell speaks. But this is I wanted to pull up the cable. I think that we are, we got a little flag building here. It looks better on the 4 hour. It's more like if we break out today, this will confirm this move. If we break out, then we'll start targeting up at 124.50 ish. But and I'm staying along the cable here.
Hello, Tim.
Hey, Andre, how are you doing?
Hello.
Hello.
I'm sorry, I have some issues with my microphone. Hello.
Oh, no problem. It's good to have you. Appreciate you being here. Steve's having some issues with his internet. He's had kind of issues all week. And I know you made some really great harmonic calls this week. So what are you seeing right now that's developing post like non-farm payroll? Anything that that catches your eye?
No, you know that I prefer an higher time frame to trade and to plot those patterns. So I believe those yen that you mentioned before, they will keep trading the same direction. So I believe they will keep trading bullish for at least. Well, let me put a guess into the next week. I believe they will trade higher. I have no pattern specifically forming at this point, but we have a very nice calls this week that I want to share with our viewers later.
Okay. Yeah, please do. You can take the charts if you want to.
Oh, okay, cool.
Hi, Andre.
Hello, Dale. How are you?
Okay, Picasso.
So let me start with euro versus dollar. One of the most frustration trades that I pushed for myself this week, and this is only one of them. And Blake has said this before. Just because we have very nice calls, that doesn't mean that we trade those calls properly. Sometimes there are some details that I miss, and well, sometimes we will be hunted, and that's what's happening to me at this point. So I engage at this butterfly pattern at 127 extension. I was kicked out 3 pips below the bottom, and then the market rally. It happens to me on euro versus dollar and another pair that I will show you later. But that makes part of the process. Sometimes we will be hunted, and sometimes we will be we will take profits from those. Obviously, we have also New Zealand versus Kiwi, New Zealand versus dollar. The one that survived, that I survived based on the very similar harmonic, on a major, on a higher degree scale. But let's start from the top of the list. So we have pounds, and this is the one that I want to share with you at this point, because I believe we are now, actually I don't need to believe, we are seeing the market rejecting the daily fractal resistance. Let me push this into a daily time frame just for you to get a clear picture of the pattern that we are trading from below. Actually, this is a technical double bottom at this point. We are now, and the market is now breaking above the next zone. So we are now retesting the daily fractal as a next zone, which I believe the market will reject. And we have patterns above at 125.02. This is the previous structure support level, and a few points above the monthly fractal support printed last January the 3rd. So this is the first level where I will see some pressure. And obviously for those who have engaged this trade, I believe this will be the best price zone to start to partitioning your trade and to break even your trade. Obviously, I'm talking about this bullish shark pattern. I'm not talking about the heads and shoulders formation printed below, and not even the breakout of these double bottom. So this is the first level, but I will not ignore the possibility to see cable searching for the 200 moving average, daily moving average, and then one eventually retest of the weekly fractal resistance. The weekly resistance is now positioned at 127.83, and we have the golden fee right above. So the same I will apply the same momentum for euro versus dollar, which is now threatening the previous structure support, and I need to go into a lower time frame to show you this. So we projected not only these eventual heads and shoulders default projection at 200% Fibonacci extension. I have two levels at 200% because sometimes we tend to extend the first, let's say the first reinforcement of the next zone, we extend that wave or that segment. And if the market then reinforce the neck after the formation of the right shoulder, we can also extend that segment and try to identify those 200% Fibonacci extensions. So basically the price has found some support between those levels. It has formed this bullish butterfly at 127, extended a few points below. Actually, let me put this 141 extension there. And we can see the market nailing the 141 extension and then rallying above. So this, we are now trading the 38% retracement, previous structure support. This was the daily support fractal. This was the fractal there. And we are now threatening that level. So breaking above the 38% retracement, and I will believe the market will search for the second target for the butterfly, the default target for the butterfly, the golden Fibonacci retracement at 111.25. So we will see eventually, we will see the retest or the reinforcement or even the breakout of this descending trend line approaching from above. On Aussie, the same thing. We have a nice shark pattern printed below a 224 extension. The market then later it has developed into this bullish pattern at 88% retracement, offering not only one option to buy there. The market has jumped immediately, bounced immediately from the 88% retracement, a very fast trade, a pullback, retesting, a triangle formed, and then the market breaking above as I was expecting. So we are now facing the 38% retracement. Obviously, we have other Fibonacci levels above. If the price, let's imagine if the price starts to pull back and then later resumes the bullish momentum, we can start to project patterns below the weekly and the monthly support. But first, we need a rejection of these levels as a resistance, eventual pressure zone, a pullback, retesting eventually the daily fractal. And if the price decides to keep moving forward or upside momentum, we can start to project patterns above. Until there, we need, the reason why I say that is because we need these 38% retracement to be considered as one of the criteria for to identify an harmonic pattern. So first we need a 38% retracement pullback. The price needs to retrace again, and if the price resumes, we can try to identify patterns above. But until now, we have these 38% retracement. We are threatening that level, at least for now, for Aussie, and actually trading the previous structure support also. So that's why the price has found some pressure there. New Zealand, as I showed you before, the same some pressure at the daily support, previous daily support fractal. Nice bounce from the 224 extension. The default target for the shark pattern positioned at 50% retracement. So this will put Kiwi trading 65.30s, eventually searching for this 200 moving average. This is a 12 hours time frame chart. Eventually the market will find some support, some resistance there at the default target, but we need we need to this is like a task list. No, we have task lists for our trades, and we need to first things first, and we need to wipe out this daily fractal, and trading above that fractal, I believe the market will find some pressure at this structure support. Another shark pattern, this one at 224 extension for Kiwi. Australian dollar versus New Zealand. I engaged this trade today. I pushed that trade for our community. This is not the conventional or the normal or the usual shark pattern, because the ratios are not the default ones by the manuals. But I found out those ratios as very useful when the price finds resistance between the 200, in this case resistance between the 200% and the 224% extension. Those are the criteria for the shark pattern. What is missing and what is, let me say, what is not respecting the criteria is this extension. Okay, so but I believe the market will trade lower. This is, let's say, this is a shark pattern. This is my shark pattern configuration. So I believe the market will hit the size, and that may push the price trading to 105. Searching also for that.
That's a Rembrandt.
The 38% retracement, and eventually these previous structural lows. And previous structural resistance also. Do we have an interview today?
No, nobody.
Okay. So for Swissy, I need to show you other chart that I published before, because I was messing around with this one. And let me try to.
Yeah, let's see your Michelangelo now.
Yeah, let me try to. I published another chart on our community, for our community. Let me just try to push that chart for us. In the meanwhile, let me try to jump to another one, dollar versus Canadian. I'm trying to do a lot of things at the same time and multi-processing things. So 12 hours time frame, let's go again into an higher time frame. That's where I feel comfortable. And let me try to share with you, if my computer allows me, the bigger picture for CAD, which is.
Oh, look, you use fractals too, huh?
Yeah.
The green up there is a fractal, right?
The green, like those lines are fractals. Those resistance and support levels. Yeah.
No, I'm talking about the green candles. All the green candles all the way up.
Oh, this is just a copy of this previous swing, Dale.
Oh, okay. Got it.
This is a copy of the previous price action projected above the eventual cup and handle formation that we know that is not usual to find on those.
How do I sign up for your harmonics course?
I'm sorry, Dale?
How do I sign up for your harmonics course?
You don't need to sign up. After a while, you are completely familiar with those ratios just by seeing them.
Okay, buddy.
You threw the bait out. He wasn't biting. Dale.
Yeah. All right. Mentor me, Andre, please.
Mentor me. No, you know that I have a few people that are following my work, and that I suggest some pushes for them. And actually they prefer to learn instead of trading them. So most of the people that join me prefer to learn the ratios and the divergence between those highs and those lows. Well, they prefer to learn how to identify the pattern, and that's I believe that is crucial in order to develop your own trading strategy.
That's right, because then they won't need you eventually.
They don't. If I die, they can.
Yeah, that's your legacy in the market.
Yeah, that's your legacy, kind of. Okay, Canadian, and let me push my RSI here. I published this chart yesterday mentioning, okay, be careful because the market is trying to provide some signals here. So, and if I double click my RSI, I have my RSI on a full screen mode. So that allows me to identify those lows and highs and treat RSI as a line chart, basically. That allows me also to get a clear picture of what the market is trying to do and in terms of price, and if that is synced with RSI, and if we have divergence between what the price is doing and the RSI is showing you. As a relative strength index, I believe if the price fails to follow the RSI momentum, it will start to form divergences between both, and we need to pay attention on those, because if we see divergences at crucial price levels as previous structure support and resistance levels, the price can bounce when we think the market will start to keep trading lower. The market can eventually bounce from those levels. What I was seeing yesterday was this structure, the price structure divergence with the RSI. So we have the RSI printing new lows and the price rejecting to print new lows, entering into a sideways moving process. So I will not be surprised with a bounce right below this previous structure. Actually, the market is now has already, let me check that precisely. Let me put the magnet mode. I believe the market has already broken these previous lows. Yeah. So I will not be surprised at that to happen, but at the same time, we prefer to see the market entering oversold conditions. What I can see here is, well, first things first, a bounce from here and the eventual cup and handle formation that will put the price trading at 137.36. This is a default projection for the pattern. If that fails, I believe the market will find some support at these major trend line supports. Let me try to show you this. And obviously breaking that trend line will increase probabilities to trade even lower. But if you put a trend line covering these lows, and if we project this sharp pattern at 168 extension, breaking below this small support level, I believe the market will feel some pressure at that price zone. Let me now push the CHF chart here.
Hey guys, I'm going to have to step out, but Andre, I wanted to thank you for being here today, and Coach, obviously, always thank you. But Andre, we love your work, and for those people that want to know, more of Andre's work, you can contact him directly and follow him directly, or you can, he is our in-house harmonics expert for ForexAnalytix, updating all the instruments with harmonic charts. So I'm gonna step out because I have to. But thank you guys so much, and I know you're gonna continue on. So thank you.
Have a great weekend, Blake.
You too. Have a great weekend, everybody.
Okay, Andre.
Thank you, Blake. Okay, this was. Let me open a full screen. This was the chart that I published yesterday for our community. So I believe. There's a few options here. So this is a 4-hour time frame. Let me talk about the previous historical data that we have here, because I want people to get familiarized with those harmonics and those ratios. Basically, we have this yellow shark pattern at 168 extension that was followed by another shark at 168 extension, another shark at 168 extension, wow. And the one I was expecting at 224 extension, forming the eventual head here for one eventual edge and shoulder.
It's like Jaws, yeah, man, right?
Exactly, because you can see those ratios being respected constantly, and if you know how to identify a false breakout, and I leave this as my daily tip for those who are learning process, to learn how to identify a false breakout. If you know how to identify a false breakout, you wait for the extension at 168 extension, and try to observe what the market will do once the market achieves that level. It will constantly feel pressure. I'm not saying the market will rally from those levels as it happens here, but the market will feel pressure. It will offer you for sure an opportunity to get involved with the market. Just trading, just waiting for the 168 extension after a false breakout. We have a false breakout above the previous highs. We extend below this wave or this segment. We extend this wave to the downside, and we search for an extension of that segment to the 168 extension. Obviously, there are some criteria here that allows you to identify the shark pattern, but just searching for a false breakout, we can try to create something, a motive to get involved with a friendly risk-reward approach that is crucial. But for now, what I'm seeing, and note that I was expecting that bearish momentum. The market has found some support here. That's where we are at this point. We are threatening to break below these levels. Breaking below these levels will offer some more downside momentum. I believe if the market pulls back, forming the right shoulder here, something very similar to this momentum may be followed. So we can expect an aggressive short from above if that happens. Let me get right from this. What I was suggesting on CHF, it's something like a pullback from that level. Actually, the market has already, let me push up a 4 hours time frame. The market is already retesting those highs, and we know that the right shoulder, and that I need to get a clear picture here. I need the chart. Well, the price has already retested. Let me check the 78% retracement. We need the price respecting the 78% retracement here. The 78% retracement, the price is threatening that level. So this is the limits to form that eventual right shoulder here. So the market is already fading that possibility. So I believe at this point that will not happen. And the price action at this moment suggesting upside momentum. So basically, we can, the same picture for CAD and what I was expecting when I published that 4 hours time frame chart, that bullish divergence here, and it's, I believe all of you can identify that. The bullish divergence that I mentioned when I published that chart oversold, and we saw dollar versus CHF rallying from below. So the market rejecting to break below the previous lows, and the RSI already oversold below the previous lows in relationship with the price. Bullish higher divergence, and the market is as trading higher. So let's say if the market rejects a 78% retracement, it can happen. We can face this as one eventual orthodox heads and shoulders. But at this point, I believe the market is the market was faded. The market faded that possibility. So let's move on and let's try. I'm sorry, Dale. Interview today. We have no. Okay. CAD already shown. NOC. It's a very interesting one that I want to share with you. That was with you specifically, Dale. Not
okay, thank you.
So this is our third drive, no? I believe.
Yeah.
We were trading below, so we were trading at 897, I believe. Let me push that chart for us. And I was projecting patterns below. Let me try to show you this. Open in a new tab, please. This one. So we were trading back to 197, 91. So when I was projecting at that point, I was projecting patterns below, false breakout above the second top, and well, one eventual fall from this structure support, eventually searching for the 168 extension. One of the possibilities, the other one, another third drive that may offer a new short opportunity. So we have a first one, the second one, and the third one above. Daily fractal printed above, black candle, and here we are trading below this structure. Actually, I have two draws here, one on the higher time frame. That's why we see these numbers there. But on a daily scale, on a daily time frame, I was expecting that third drive. The market is starting to fall from there. We have also the market nailing, or actually not nailing, because this is a daily time frame. The market extended above the completion point. The deep crab pattern. What identifies the deep crab pattern is this 88% retracement. So some of the people still asking me why it's a deep crab if the market will complete at the same extension level. Yes, it will complete at the same 168 extension from X to A. Let's consider this an XA wave, but it needs to retrace to the 88% retracement, pull back, and then 168 extension from this swing. So that identifies a deep crab pattern. So at this point, we have a new fractal above. 38% retracement is the minimum expectation, my minimum expectation, because it's not the perfect crab pattern. The market is reacting well around that price level, but it's not the perfect pattern. But I still expect at least the 38% retracement to be reached, and eventually a retest of this previous, the monthly and weekly fractal resistance above or below 180.46, 181.97. The yens, we have already covered the yens. Also Mexican peso, also another bearish alt-bat pattern. I shared this one. Once the price approaches this 141 extension, so the pattern gets completed at 113 extension, the alt-bat pattern, the market has started to push above, and once the price starts to approach this 141 extension, I said, okay, I published that chart, okay, we are trading the territory of a bearish alt-bat pattern. Careful, because a breakout of this ascending channel or ascending structure support may offer some bearish momentum. We are now, well, basically, I will search for the potential for the cipher pattern that will reinforce this ascending trend line support. When eventual, for now, it's a virtual trend line. It's a non-existent trend line at this point, but it can be That's one of the possibilities, a reinforcement of that trend line, and a support there will form the bullish cipher pattern at the 1916. Obviously, that eventual heads and shoulders projected there, it is starting to fade unless the price decides to bounce immediately from there, print the right shoulder, and then a violation of this support as or these lows. We are now facing the 50% retracement from these highs to these lows, so from the weekly support to the daily fractal resistance, and we are now rejecting or finding some pressure at the 50% retracement. Published before the completion point, bullish sharp pattern at 224 extension for dollar versus yen. The market has nailed 104.55. It's now trading, it's already trading at targets. Obviously, the market is already approaching the 38% retracement. This is a 38% retracement, but not the one that we need. We need the one from above. Let me just check where we are at this point. We are trading the 50% retracement, and that's why the market is rejecting to trade above. It's a shark pattern. Default target, the 50% retracement, completing and forming the 5-0 sequence. I will put this trend line, I will push this pink and very fat line here. So the 5-0 sequence, one, and this is the 5-0 sequence. It makes part of the shark pattern. Every shark pattern will form this sequence at if the price has shifted 50% retracement. It offers a sell opportunity at this point. So that's why I shared it yesterday, the possibility for this eventual 2618. So the 618 retracement that will penetrate again inside this double bottom structure. So, but that may offer another bounce from the golden fib. A technical double bottom is a reversal behavior. So we expect the price to reverse. Note that if the price, and let's copy this projection here, and let's clone it, and let's project these from the golden Fibonacci retracement. So that will put the price trading the default target for the double top. So we have a technical double top, technical double bottom, validated with a broken neck. If the price decides to pull back and to print the 2618, it may offer not only a friendly risk-reward opportunity to get involved with targets with an ABCD symmetrical pattern projected above at the default targets for the technical double bottom. So at my point of view, if you missed the opportunity to buy this bullish sharp pattern below, we wait for the 618 retracement to try a bullish buy opportunity, searching for the 200 moving average, searching for a reinforcement of this descending channel approaching from below. We have someone raising their hand. I don't know if you have questions, Dale.
Yeah, people asking about 15-minute charts. So great job, Andre.
Okay, 15-minute charts.
Yeah, that's what I mean.
I can't go in. I can show you 15-minute charts, obviously, but
yeah,
the market is settled at this point. So
yeah. Okay,
I see nothing specifically for now. Yeah, we have a full list of 30 instruments to share with you. 90% of them working perfectly in terms of patterns for this week that is finishing now. So we welcome you to ForexAnalytix. Nothing more to say. So I just need to welcome you and well, try to enjoy while here. And that's my last 10 cents.
Okay, buddy. Thank you so much, Andre. I love your work. I respect you, your knowledge, and I love your demeanor. You're a humble guy and talented at the same time. Pretty rare. So thank you very much, Andre. Thank you, everyone. Thank you, our trading family, FACE members, and everyone have a great weekend. Don't just count your pips, count your blessings, and we'll be back full force Monday. So it'll be our first full week in the fall trading season. So everyone take care, enjoy. You're very welcome. Adios.